welcome to the pre-market rundown for Friday, October 18th, 2019. I'm Andrew Horowitz with TriggerCharts. We're going to go over a variety of things today and some patterns that we see that are pretty interesting, as well as talk about some of the more important stocks and various commodities that are making moves in today's markets. Hope everybody is good, can hear me well, can see my screen, and is ready for some action here today. Do me a favor, inside of the chat, give me your stocks, your symbols, things that you want to take a look at, and we will take a look at them. But where are we going to begin? Well, first of all, I mentioned that this is for informational purposes and educational only. Do not think that any of the things that we're talking about today are recommendations to buy or sell any securities. Because, of course, any type of investing in the markets brings its own risk, the risk of loss or total loss in some circumstances. So again, please consider this for educational purposes only and use your best judgment when investing. All right, the disclaimer's at the top there, but we're going to move along and talk about a few things. So what's happening? I mean, what's going on in the markets, right? Well, we have this creeping process again towards the highs. It looks like there's a continuation of a pattern that we've seen for some time where dips are bought ferociously, and investors are thinking that, you know what, we're going to look past all the things that are happening right now. We're going to say, there are some bad things, there are some headwinds, geopolitical concerns and trade war issues and a slowdown in economic numbers, but that's not going to last forever. So let's look beyond that and add to that the idea that even if there are all these problems and we see a slowdown, the Fed will be there to back us. So that's kind of like the setup right now on all of this. And I'm getting some alerts here. I'm going to move that down. Let me get a few of those today. But basically what we're seeing is right now that at about 9 o'clock pre-market, the futures on the Dow Jones Industrial Average down 28. The SPOOs or the mini S&P down 2. And the Qs or the NASDAQ 100 down about 6. Crude oil is continuing its ascent. We're going to talk about that in a second as well. Basically, we have seen overnight that there was a significant slowdown and a continuation of the trend in China, where we're seeing that softening economic conditions are really prevailing. And when we look at where we've been from about 6.8% 2 years ago to right now at 6%, we have to realize that a couple of things are, I think, pretty vital in recognition of what's happening there. I think clearly we understand and we know that the trade war is taking a bite out of their economic growth. But also, the Chinese economy is going through a bit of a metamorphosis from an export-driven economy where they really had most of their growth over the last, let's say, 20 years, into more of a domestically and I would say a internal type of growth situation where they want to really rely more on their own potential for growth domestically, internally, than outside. And that makes a lot of sense. Why wouldn't they want to do that, right? But at the same time, we have to acknowledge that this slowdown is not really good for the world. Chinese markets were down last night anywhere from 0.5% to 1%, including Hong Kong, Shanghai, and Shenzhen. The rest of the world is looking at this like, oh, okay, we saw the futures drop a little bit overnight, but then came rallying right back, starting to tail off a little bit right now. But what's happening in the markets in general is this. We see that earnings are beating low bars. This is a very common occurrence that we've been seeing many, many quarters, where going into the quarter, analysts will start dropping down their overall estimates for companies. And when that happens, people get concerned and investors start saying, maybe this is not the quarter that we're really going to be looking for. And magically, companies are able to best those estimates by a penny or two, coming right on revenue, and they give you some outlook that may be, good or bad. But one of the things that is the hallmark of this kind of market condition is that even on a slight beat, stocks do really well. One of the problems is that it's very headline-driven, this market. People don't look past the core numbers on economic numbers. They don't look past the headline number on earnings. They're just looking at, okay, did they beat or did they miss? Not considering, even if they did beat, where were we from a year ago and how does that set up for the stock? So that's something we like to look at, kind of looking at the comparison of where things were to where they are now. But the good news is, for all of us that are investors, we recognize this. And for the most part, you don't want to be too one-sided in your market exposure, because just look at what happened with Netflix yesterday as an example. Netflix number came in pretty bad. Their outlook was poor. Their sub additions was not as good as it should have been. Their outlook and their guidance was downright awful. And miraculously, the stock was up dramatically. Well, why is that? Well, if you look at the comparison of where people thought things would be, where the stock was trading from where it had been, people said, you know what, maybe this is kind of the end of that cycle where they're going to see a slowdown, and maybe it was oversold to a point where we can boost it up and make some profits moving on the news that we see today in the interim. So there is a kind of interesting market push-pull going on right now, and I think a lot of this is built on the hope trade, the trade that we're going to see a resolution to China trade, and we saw that skinny, what did we see last week? The skinny partial phase one deal, the skinny partial trade one deal, phase one of the U.S. and China that was supposedly this hallmark event. But really, in fact, we know what it was. It was just something to put on the news to make things look good and to paper it over. So we do have the hope trade alive and well with regard to, the Fed is going to back us. And, the earnings are going to get a lot better. It's a soft patch in the economy. Brexit's going to actually work out and not become a major market event. And we have the trade war resolution. Now, looking at the U.S. economy, we do see some lumping indicators. We saw that ISM a couple of weeks back on the manufacturing front was pretty soft. Services came in also softer than expected. Factory orders, industrial production, capacity utilization, all of those have been, I would say, on the weaker side, not anything to look at and say, yeah, well, that's really good. Philly Fed came in a little bit lighter yesterday, and we are seeing pretty much the only thing that's holding up pretty well is the employment circumstance. But that's here. Around the world is getting a little bit more difficult. One of the things that we looked at this week in particular that was, I think, pretty important was retail sales. Retail sales came in 0.30 to the negative when expectations were for plus 0.3%. And that is, I think that's really important, and I'll tell you why. I think it's important because when we look at retail sales here, and we think about what has been the linchpin in what a lot of investors, analysts, and news media have been talking about, and they've been talking about the idea that, fortunately, we have the consumer holding up the economy. And when all things considered, when you see manufacturing, when we're in a manufacturing recession, and we see other components of the economic starting to slow, the good news is we have the consumer. The problem is, we don't have the consumer anymore. At least the most recent monthly number from retail sales shows us that consumers are pulling back. Something to consider as a backdrop item. All right, moving along, we have some tech news. Of course, some earnings news on tech and on financials. We saw this come out this week, and we saw banks like Goldman Sachs and Bank of America, JP Morgan, hitting an all-time high, by the way, JP Morgan, Netflix come out. Next week, we have existing home sales, new home sales, durable goods orders, and the final October University of Michigan Consumer Confidence Index. So that's important. I want you to make sure that you are on a mailing list, okay? And also, just to let you know, we did put something in the chat a moment ago. I'm going to send you a link right now. Any of the indicators that you see that we're utilizing today on our screens are available for a 10-day free trial over at TradeStation. Any new subscribers to the TriggerCharts Commander Series Indicator Suite will get a free 4-hour online coaching session. Basically, it's a pre-recorded session that gives you a lot of insights into markets and trading, $199 value. So make sure you check that out and get on with that, because I think that's something that you would really enjoy, and we're giving that away, so you could check that out at any time. What else do we have to look at? I think that's it. Okay, a couple things I want to look at here. Let's look at the KRI. This is a key reversal indicator. And you can see right now we're a little bit hot on the KRI right at the top here. You can see that we are starting to point to a little bit of a level that is in the overbought range, but not terrible. But again, I want to show this to you. This does one thing and one thing only for people that haven't seen this before. It really looks at the sentiment, overbought, oversold levels for the market in general. It uses one symbol and one symbol only as SPY as the base of what the market is doing. It has a few things in the background as well that calculate on areas that we have coded into the system. But basically, it is not anything more than a look at where do we have significant overbought or oversold levels. And what's really nice is I find that the oversold levels work really well. Remember something, people are geared to buy stocks. They're not geared to sell. The idea is that they hold stocks until sometime in the future, and if they go down, we're going to hold them anyway, maybe even buy more. But we're going to hold them for the long haul. That's most people, not traders. So there is a general tendency to have a buy or a long bias for the markets. When you get down to these levels that are very significant in terms of oversold, like we see here and here and here, those are usually times when you really want to start thinking about reversing and closing out some short positions, if you have broad-based short positions possibly, or if your portfolio is leaning on the short side. And it is time to start thinking about, if you have some cash to deploy, there may be a short-term rebound that looks very enticing. And what we get are these clusters that form, these clusters that are, right, you can see these green dots here. You see the same thing on the top, right? You see a red dot here, red dot here. Those are showing overbought circumstances. When we get into these oversold circumstances, especially when you see them very deep, get below 5, if you can see those, 6 even better, well, those are times that you really want to consider looking at the long side of the equation. We did see that when we were right about at the bottom at the beginning of October. Once again, a very good signal to start thinking about moving towards the long side. Starting to heat up again. Market is in equilibrium right now, but a +1 overall. We can see that coordinates and correlates to the bottom chart. So this is the key reversal indicator from TriggerCharts. Well, what do we have to look at here? Well, let's take a look. Something I wanted to show you, and I thought was really interesting if anybody trades crude. So I had a discussion yesterday with someone on the phone, and I want to bring up a 60-minute chart here, because I think what's really important to look at here is something that was up already, something that we saw yesterday. And I want to focus in and really draw your attention to this and even make this chart a lot bigger. All right, so take a look at this. So I was on the phone talking with somebody yesterday, and we had this discussion where is crude right now? And crude was showing a short positioning a couple of different times. And we were talking about, well, this is a short. And I said, you know, the problem I'm seeing with this is, while there is a short, there's a couple of different things. First of all, we saw some oversold on the aileron, and this is a separate charting indicator that you can pick up over at TradeStation at the App Store. And by the way, if you haven't done so, there is a showcase that we were on this month. It's over on the Trading App Store. And by the way, yesterday, just brand new, I was interviewed by Investors Business Daily. We had about a 40-minute video, TV, podcast kind of discussion. And you could go to Investors, just to look up Investors Business Daily and my name, Andrew Horowitz, maybe, and you'll see some of the things that we were talking about there. But one of the things I saw here was that there was some pretty good level of overall support and resistance. And we were talking right about here in the time range, about 8 to 9 o'clock, 10 o'clock in the morning. And I looked at this and I said, you know, this is not a time that I'm really considering that I think this is a good idea to get long. Okay, because, let's clear this because those moved to the wrong spot. Because what I'm seeing is, if we really just draw a straight line across, right, just go right here, and we look at this. Let's put a quick, click the right spot. If I can connect several different lines across, you know, I see that, okay, there's some resistance there, but look at this great support. And look at this going from right to left, always looking left, where we're seeing that there is a lot of support here. And I said, yeah, I really wouldn't get into this short right now. While the autopilot was signaling a short, it pretty much took you out relatively quickly. Really, you know, when you look at this and you look at where it took you out, you have to acknowledge that, you know, you got short here, you got out right around here, called a long, and that long really played out very nicely through this entire area here. And you saw this chop, look at this area here, this choppy area that we're looking at there. And when I saw that and I combined it with all this, I said there really wasn't a lot of air to the left. It looked like there was a major amount of overall stability working around that important key level. The green line is a key support level. The red line is a key resistance level. Of course, resistance turns to support. Support turns into resistance, depending if you're on the other side of the equation. But what I found was that there was really no reason to get short here. And even though we talked about some of the signals that got interesting to look at, I said, I just can't imagine really seeing this as a short. And there was some air in this area, and we started to move up through that, and lo and behold, we did get right up through that, holding up on that support right now, close to about 54.32, up about 0.5% today after yesterday came up, even though there was a pretty big fundamental reason why there wasn't essentially a reason to really move oil up, but it wasn't moving down. And when you see this, you have to really respect that. Numbers that I'm looking at here, long-term numbers, about 52, we'll call it, 51.97. You can go back in time and see that there's a bit of a support there, but you know what? There's not much more below. This is a 60-minute chart here. So 51.94 is a level where we saw that there was a couple of different lines across. All you have to do is connect lines together. That would be an interesting play on the 60-minute. All right, let's make this a little bit smaller again. And then let's go over to, what else are we looking at? All right, let's look here. Let's go here. Okay, Bank of America Securities clearly on the chart on the right here. Does anybody see anything that's pretty obvious from this chart? It's pretty obvious. One thing that I see from just looking at this chart straight off that seems to be glaring. And again, I'm going to take a very simple tool. You could use your, whether it's your box tool or your line tool. What I'm going to do here is I want to look for my line tool, and I'm just going to kind of draw a line right across the triple top here. And lo and behold, look at that. Look how easy that comes out. We see that there was a buy. It turned into a closing position, then a short a few times here all the way down. Very nicely done. A perfect level of overall trading going on. Some in and out that didn't do much. A break up to the top and then an out. There's some mess. There's a lot of mess going on here. A lot of mess that's going on. Choppy trade. But yes, inside of a range. That's right, Bill. And also you have not only inside of a range, but you have a triple top here that it respected. So you could combine some of the tools here, and also notice that when we look at the bottom area of the aileron, we did start to get into positive territory. That was a nice little setup that you saw the momentum change. And the aileron really deals with momentum and trend. So we have on the top looking at key support levels based on volume and price. Very important to put that. I mean, if you don't put volume in price and price together when you're looking at support and resistance area, you're just spitting in the wind. You got to make sure you understand where the players are putting their money on the line. And when we look at this, you have to realize that these levels are, there's just a lot of mess here. We'll see if we can get past this level, but there really is not much that's going on there. I want to go to Roku for a second here. Roku, interesting chart. So Roku, I was looking at this, a couple levels that, 94 would be a nice level. 97 kind of came up on my list. I would be a buyer at 97. Got down to that 97, 98 level. Didn't really clip down enough, but really rebounded very nicely. We got a new set of altimeters that were drawn on the right here. Let's make this a little bit bigger. We got a momentum shift that was pretty dramatic. You've got something called a hole. So we'll take a little trade station. I mean, really, we have a hole right there. You had a hole. I got to draw that again. Sorry. We have a hole inside of here, right about there. So right now we have some consolidation that, not consolidation, a trend that broke down from the 170 level down to about 99. Great short called by autopilot. Worked really well. You saw that there was really a hole. It broke down very quickly. Now we see this very quick reversal right here up to what I would consider resistance right now. Question is, we are in a green and we are in a reversal trade right now. We have a very strong trend going on here. However, I will tell you that I would think that there's probably going to be a new altimeter drawn here very soon. I would venture to say that somewhere in the 142 range, I would say 141 range, it could be the top for right now with all this strong selling going on. A lot of people are probably covering their shorts. A lot of people looking at the bottom, buying it. But how much do you want to really trust this with all the competition out there is probably what's going on through people's heads. This would be on my short radar for when it does fail, coming right back down to its 109 level. That would be the level that I would look for when and if we start seeing a little bit of a peaking out here and an inability for the stock to move up any further. Yep, Bill, you're right about that. I don't even know what to say about this. This is a disaster. Till rate, remember this one? Look at this. I'm going to go back. Till rate was $300. Now it's 22. This is a great, I don't know. This is always a mess. Some of the pot, marijuana, MJ, Mary Jane, weed stocks are actually starting to really show some signs of life, albeit from a very low base. Not all of them. Canopy Growth got a little bit up. You don't really see it because it's a price really here, but you went from a bottom of 18 up to about 20 or so, a 10-11% move off the bottom, but still look at this one. I mean, come on, let's be honest. Can you get a better signal? How great was that signal? How great was this signal? So this is why we use this. Now, would I have taken this signal? Yes. Kind of came down a little bit, came back in. You made a couple of bucks there. This was a great signal. What would I do right now? Don't forget, you're starting to see that the aileron is, in fact, turning and moving a bit higher. Now, just to make this clear, the aileron is a separate and distinct indicator. It is not part of the Commander Series package. But what you got here is when you combine the two of these, pretty much all you need to invest, all you need to trade, all you need to really understand about where a stock is going, where the potential is, where the upside opportunities lie, where the downside opportunities lie, and where the trade signals are initiated. It's color-coded. That was the point. And I tell you, if you haven't heard me tell you this before, the reason that it's color-coded, it's for me. Because I don't want to spend a lot of time worrying about, okay, let me measure this, let me look at that, let me kind of draw lines all the time. I wanted to see it very visually on a chart, and a color coding, I could just open up any chart and see, okay, where are we? Well, we're in a long-term trend down that is signaled by a red indication. And how long has it been? And where is the support or resistance from here? And I can see that very clearly with all the colors that we laid out. I think it makes it very, very easy, and that's why I did it. I did it for me. Selfish me. But, I think that when you look at, let's say this stock here, or what else do we have? Trade Desk, for example. Trade Desk, we got a signal recently after. Look at this enormous, absolutely just enormous range. 240 to 280 right there. We had a really good support on this line moving up across the 240. Once it broke that 240, came down to 210, got some consolidation, broke down again, and now we're starting to see the reversal. And one of the things you had to recognize here is when we were in the area, let me clear this all up because I want to show you something. When we were in the area of an aileron that had been pretty negative but got shallower and shallower into the end, and you started to get some support over on the left side here, and 180 was clearly a magical support level when we looked at this from a simple bing right there. Let's move it up a little bit right there. Got some really good support in that range, and that was really good. So I think that when we look at this, you have to realize that 180 is pretty much your stop on the way out. The opportunity on the upside, you have some overhead resistance probably in the 212, 214 level that can be seen by, just draw a line right there, and that's where we pretty much came to and then reversed. Bounced off its bounced off its key support level. That, right, see that? I don't know if you can see that. Let's see if I can. The blue line, the cyan line right here, is a high volume node, and that was important to look at, that we did bounce off, and that was very good yesterday. Stock is up a little bit today in a generally downward trending futures market right now. But something to look at. I don't have a lot of faith in this. I like it. I do like this stock. How long I'll hold it all depends on how it plays. Remember something key, a lesson I'm about to give you. Ready? You ready? Love a stock as long as it loves you, because otherwise it has no feelings. Otherwise, it doesn't matter. Let's take a look at some of the stocks you have, and we'll go back to this. I saw some in here. MDR. I didn't do that right. Yep. So I think we've looked at this before. McDermott, this is obviously a stock that's been caught up in the whole opioid scan, and this is a real problem with regard to what's going on. This is an area of interest. Let's just see. I want to take a big picture of this particular chart here. Yeah, big gappiness here. Big. So really what we're looking for, what are we looking for here? So I'm going to make this a little bit bigger for you. We're looking for the potential for this stock to get back up into about the $3 range. And I would say a target of 409 up to about 474. So the range that I'd be looking at and really be focusing on here, if this thing can keep on going, if in fact it really does get some kind of resolution from this whole opioid deal, is if it can get past there, right? That range right there, I would have, and I'm going to give you a secondary range right about there. Those two ranges are the areas that I look for. I think you probably fail at about $4 because we saw such a great amount of support there. A lot of people probably lifted up, bought some positions there. It did go up to about 7. Obviously, the stock is down significantly, moving up very nicely over the last few days. I'd be very careful. My stop would be under, I guess, about $170 or so on the stop for this. I had another one in here I saw. Let's see. Okay, EA. In the game. Am I not typing? What's happening? EA. There we go. A. All right, there you go. Future's starting to tick down a little bit lower, down now 54 on the Dow Jones, 4.5 on the S&Ps, and about 11 on the Qs. So I'm not sure what's happening there. We do have durable goods today at, I think is it today? I think it's at 10 o'clock. Actually, I don't, let's go back to this for a second. Durable goods this week? No, that's next week. There is a 10 o'clock number coming out today. Let's see here. What do I see? What does anybody else see? We see that we do have a little bit of a reversal going on, or I wouldn't say reversal. I would say a kick off the bottom. There was a really good oversold reading. It kind of correlates right to that level there. We start to see the reversal of the trend. It is picking up. Top end on this, probably if you were to say where is the top end on this? What are you looking for? Where is this thing going to go? Actually, let's go here. I'm just going to draw a line. I'm going to move that line in a second. I mean, maybe $100, 98 would be the high end of this. I still think there's probably a lot of support back down at the 90, we'll call it 96 level, just off of that 97.44 is trading in the pre-markets right now. There's some air right here, but look at that. The next area I get of a line I can draw, and look how magical that is. Don't you love that? Look how we just got right into that level, and that is clearly showing us, right there, look at that, that was the top end that this stock was looking for, reversed right off of there after strong initiation. We are seeing a little bit of a change in trend right about here, in this area right here. Make you dizzy with this. But I don't think that this is telling us a lot and anything that's really exciting in my opinion right now. I wonder what's going on. The future's really starting to tick. Interesting. Somebody said something about something, I'm sure. And then was there somebody else? So gold. All right, we'll do gold. And then gold we've been talking about a lot. Gold we've been looking at possible as a short candidate. Let me show you why. The problem with gold is a gigantic hole through, give or take, right about here. You get below about 139, you go to 134. Now, is that a big deal? $5 on this? Not really. But I think it's really important to recognize that there is some downside. Now, if you're playing any of the miners, if you're looking at any of the particular levels of alternatives that are play within this space, I'd be really careful. One of the things I'm also seeing here, and this is what has been concerning, we have been looking at possibly a short on this, is the momentum is dying. Momentum is just dying. That's not a good sign. You don't want to see that. And when you see that in a stock or in any symbol, you really start to question the situation. So I think that's important, okay? Bottom line is, we'll kind of look at one more. If I can look at Tiva, I'll look at that. Actually, let's look at Mo. I think that's interesting. MO. Let's clear my drawings. Market's going to open in a little bit, just a couple of seconds. Mo is actually, of course, tied up in the whole Jules situation. Stock is down about 22 cents in the pre-market, hitting some upper side. I think the potential is you have probably to about 45.54. Big amount of resistance there. We did see a nice move on the upside after rolling over for a long time. There's probably some juice back in this. Not the vape juice, unfortunately, but there's probably some juice up in this, and I would just look at that as maybe some top end of 45.60 or so right there. See futures, look at that. The bell rings and people go crazy, start buying. So let's see if that holds up today, reverses, or what it does. Thanks for joining me. And like I said, you can go over to the trading app store over at the trading app store over at TradeStation and check out all the various opportunities that we have for 10-day free trials on any of our indicators. So with that, I want to thank you for joining us, and we'll go from there. See you next week.